Hans Goetti, Chief Investment Officer with Finaport Asia. He joins us live from Singapore. Hans, good morning and thank you for joining us. Hans, I guess the big story clearly is commodities. Even though there is a deal in place when it comes to Iran, commodities across the board have recouped their losses.
That's correct, yes. You still have relatively decent growth in China, and China is, of course, the driving force when it comes to commodity prices. And despite the fact that we had huge amounts of investment in infrastructure and what have you, there's still a long way to go. China is a big country, and the demand for commodities will stay strong. Sometimes it's sentiment driven, but we still think the super cycle in commodities is intact despite of the corrections that we have seen. But I think it's going to continue from here.
Hans, based on the recent U.S. economic data as well as the FOMC minutes, do you think the tapering can start sooner than March 2014 as well?
We don't think so. In this case, we're with the consensus, and I think the consensus is looking at the earliest date for tapering in March. First of all, the Fed under Janet Yellen will be even more dovish than under Ben Bernanke, and I think Janet Yellen seems to be of the opinion that the Fed can control anything. She actually talks about optimal control. It sounds scary a little bit. It sounds almost like a command and control economy, micromanagement, and so on. But the Fed actually believes that they can have an influence on the real economy, where in reality this was not the case, because the contribution by the Fed, by QE, on the real economy has been minimal. However, it has been absolutely crucial for asset prices. We have a 90% correlation between the Fed's balance sheet, for instance, and the S&P 500. And if the Fed continues to extend its balance sheet, which even on the tapering will be the case, they will just buy fewer securities, we think that equity prices can move higher even from here.
Hans, as of now, money is moving out of commodities as an asset class. It is no longer chasing fixed income instruments, but it is clearly chasing equities as an asset class. Do you think that trend is here to stay for the first half of 2014 as well?
I think so. Central banks show no signs of changing the game because they're basically on a treadmill and it's very hard to get off. Again, tapering is not tightening, and as long as central banks are expanding their balance sheet, and not only the Fed, we're talking about the ECB as well, who's talking a bit more dovish now because of the euro strength. We're looking at the Bank of Japan, where QE will continue for at least another 2 years because they cannot afford to do otherwise. So we think equities are well supported. At the same time, the outlook for bonds is probably a little bit more murky because at some point the interest rates will go up, long-term rates will go up, and of course that has implications on practically everything else, including commodities and of course including emerging markets first and foremost.
Hans, where do you see the dollar index consolidating over the next couple of quarters, and what's your view in light of that with the Indian rupee? Because you think a dovish stance would lead to a soft US dollar, giving the rupee a modest boost?
I would think so. I mean, the DXJ, which is the trade-weighted dollar index, is basically in a trading range between 79 and about 84. We're just about above 80 right now, so it's at the lower end. We cannot rule out that tapering fears, I'm not saying talk about facts, but just tapering fears may lead to a somewhat stronger dollar combined with a more, let's say, dovish stance by the ECB and, of course, with a very aggressive stance by the Bank of Japan. So relatively speaking, the dollar could appreciate a little bit. But at the same time, we think that tapering will come later rather than sooner. And that should actually help emerging market currencies, at least for the next 3 to 6 months. We don't think there's a lot of weakness to be expected. As long as tapering is not happening, emerging market currencies are probably relatively well supported here.
Hans, as of now, risk watchers are excited that central bankers will print money and the liquidity party will continue. But should one be slightly watchful and careful of the movement in the US 10-year paper? The US 10-year yield are now marching towards 3, and if US 10-year goes to 3, equities will have no option but to come down.
Well, the Fed so far has been able to keep the long-term yield under 3%. The 10-year bond is extremely important because it has implications on mortgage rates in the U.S., and we see higher mortgage rates already reflected in a weaker housing market. And I think the Fed is intent to keep rates below 3 for now. But we also see inflation. At the moment, nobody talks about inflation. In fact, everybody is afraid of deflation. But we think inflation rates are understated. At some point, you're going to have some cost-push inflation from the labor side, maybe not in the next 6 months, but maybe in the next 12 or 18 months. And then long-term yields will probably go up above 3%, but we see this only happening in the second quarter of 2014. And, of course, that will be a game changer. But for now, the Fed is trying to keep it below 3. As you know, there's no free market pricing system in bonds or in any other asset class. The Fed is intervening, and I would think that for now, the bond will probably remain under 3%.
Hans, interestingly, sentiment towards industrial metals has remained subdued despite the resilience in Chinese markets and recently announced economic reforms as well. How are you seeing positions building up in ferrous and non-ferrous metals?
Well, the Chinese, obviously, after the third plenum, it became clear that the Chinese are on the path of reform. The implementation, of course, will be difficult, but at least some of it will be implemented. And it is also clear that the shift from fixed asset investment to consumption will continue, and that means lower growth rates. I mean, not very low growth, but no longer 10%, but maybe something more like 6 or 7%. And that, of course, has implications on industrial metals. As I said, I mean, China is the big user of this type of commodities, and of course, everything will depend on how the Chinese economy will hold up. As I said, we still think there is a lot of investment spending to be done because China is still a large country, but we think that from now on maybe the going in commodities will be a bit slower, but we still think the super cycle in commodities is not over.